All right. Good morning. Good morning. Good morning. We are going to give it just a minute or two. Balmy 50 degrees. Bob said, Bob, it got cold. It's 11 degrees right now in Utah. Was making some runs to the local we call it DI. It's like a Goodwill, cleaning out the basement, getting rid of some old things. Oh, it was freezing yesterday. Good morning, Bob. Good morning, Perry. We're gonna one more minute here. There's a couple in the waiting room. That audio's trying to come on. Well, the market seems to be pausing in front of it, really wants that inflation data. The PCE is a big one for the Fed. We've really moved our expectations, I think, about as far as we can move them without starting to disrupt the market into corrective action, right? Meaning 5%, not corrective, not a correction, not 10%. I would say more consolidative action than we've seen yet. So I don't know. We'll see about that. All right, let's dive in. Welcome everybody to the Market Watch Group midweek check-in. We had a great foundations class last night. We didn't really cover a ton other than just sort of, chatting, talking about what's coming. What would you like to see? What are we trying to do more of? Things like that. So if you wanted to listen to that, and then you said, man, I've got a great idea. Make sure you get that to me. Here are the disclaimers as always. And here is today's agenda. We are going to talk about the opening analysis, what's happening in the futures, what's happening in the news. What are we expecting? We are looking at just a quick revisit of the posture. Did we get it right? We moved up. Were we too aggressive? Not aggressive enough? Or is it shifting on us? And we think it's going to significantly impact the score, right? Do we have open trades? And if so, what are you doing with them? If you have any that you're wanting to use as a guinea pig at any point, if at any point everyone else would love it. Some people are like, oh, I don't want to bring up my trade. Everyone will be like, oh, why is it? People love watching other people's trades to learn from. A lot of times it's the opposite. People are unwilling because they're like, oh, someone will think I made a terrible decision or I did something stupid. Number one, no one's going to judge your trade. Number two, we've all made some really stupid decisions in trading, even if it was that case. But if you're willing to share and you're like, hey, you know what? I'm not quite sure what I want to do with this. Can we talk it through? Oh, yes. Keep that in mind. Open offer. We'll look at our watch list and see what's going on, if there's any setups we need to explore, and then we will go from there. All right. All right. All right. Let's start off not here, but here. Futures are down. A lot? No, but they are down. About a 1/4% on the S&P, about the same on the Dow, almost 0.5% on the Nasdaq, a little bit more there, um, and about 0.6 on the Russell. That's where we are right now. Okay, fair enough. Futures slip in a cautious countdown to PCA print. Sometimes Yahoo's headlines are terrible, but that's a good one. We got a little bit of a slip. We're a little cautious, waiting for the PCE, which is not today. Where am I? It's not today. Today we have GDP revision. Bob said, I can't even find any info. Good morning, Michael. Good to see you. Yeah, I don't know that there's, yeah, if anyone does see anything about what the GDP revisionary numbers were, let me know, but not a lot out there because no one's really paying that much attention. It's a revisionary number. Anyway, tomorrow, jobless claims, income, spending, and PCE. So tomorrow, tomorrow will be interesting. On the open, we should try to congregate in Discord and discuss, since we don't meet. If anyone wants to pop in there, okay. And then on Friday, a lot of Fed speak. A lot of Fed speak comes after. But that's the thing. It's not like we expect them to change their speech based on the PCE report by any stretch. So, okay. And then slows down a little bit, and then we get into labor market information next week. We have ADP, we have job openings, and we have non-farm payrolls. So, okay. What else do we know? So let's just take a quick peek at where we are with the Fed. At this point, we've been in this position for quite a while now. I mean, we're still 3 weeks from today is the next Fed meeting, 3 weeks from today. And we are at basically, zero chance. I mean, there's always some chance, 2.5% chance. We go to May, and we're better than 4-1 now. This is the lowest, or the lowest percentile we've seen for a cut at 18.5. When we go to June, it's holding pretty steady in this 53-37, not quite 1.5 to 1, but better than 1 to 1. So June is the first time that there's a probability favoring cut still. I don't think the market can sustain much more. We've shifted from March to May to June. I mean, if you remember back in late December, early January, we're like, oh, the rates are going to be back to zero by July. Everyone was crazy. UBS is projecting 2.75%. Everyone was just like, the Fed is going to ride in on a white horse. Nope, they're going to be cautious because they can be. Look at the data. The jobs, the growth, everything supports it. We want it. With the market rally? Yes. But clearly the Fed is not, here for the market. And I think we're seeing a good demonstration of that. So I like it in the long term. Would a cut that signals more cuts to come help the market when it comes? Hell yes. Oh yeah. Don't fight the Fed. We all know the rules. Okay. So that's the Fed. We've looked here. We've looked at the finance. Let's go take a quick peek. So here's our market now, and you can see we've just sort of wandered a little listlessly. We started high, and then we finished kind of flat from Friday. And then on Tuesday, we opened up a little bit, but then we sold off. But it wasn't very far of a sell-off. We were still only halfway down Friday's candle. And then yesterday we gained a little ground back and had the kind of this doji situation, but almost a hammer style doji, right? And so we're well in the middle of our trend. So let's just start with that relative to our market posture. Our market posture score is a 2. That 2 is based on this trend with these these two lines. Yeah, nothing's changed. We're well within that trend. It's even if we pull back a little today, as of today, this thing could be at 502 and 503, and we're still in the trend. Would have to bounce from there, but is it going to maybe meander? Today we're at 505, and then we come across, yeah. I think I have. Did I take a picture? Sorry, let me move this out of the way. I thought I had a new market cyclical market picture. I can't seem to find it right now. I do have the one that I used to have that Sandy posted. Let me actually grab that. I can't remember where it was. There we go. You know what? I'll just bring it over here. Open in browser. And let's make this bigger. Okay, so just a real fast look. What tends to happen? And I actually have another chart. I believe this one is a 20-year ending in 2019. So this is like basically 2000 to 2019, 20-year snapshot. I have another one that's either 25 or 30 years continuous. They're very similar, which gives validity to the analysis, in my opinion. But if you look at what we tend to expect here in late February, early March, well, it tends to look like this in late February, in early March. Okay. Right. And if we hold this bottom by somewhere late in the first week of March, that's a nice little move. And then we might pause and get another one, and then pause and get another one. There's 3 potential windows, big windows. That's absolutely what I'm looking for until something else shows up. I'm looking for this. I'm a 6.75 on the market already. I'm bullish. Cyclically, we're entering a time frame of the market when conditions are historically favorable. So am I going to over trade? No, I'm going to trade as much as I should for these conditions. But right now is when what happens is people will get a little aggressive and they'll over trade in this period now where it's a little more choppy still, right? Just, again, because a 675 doesn't mean you're just going to have a bunch of trades on all the time. A 675 doesn't mean things are easier. A 675 means we have great underlying conditions from sectors, from volatility, from right. So there's no like, oh man, that's really concerning. And when it concerns, like the VIX has a little bit on us, we pay attention and we acknowledge it. So what happens then is overtrade, it goes sideways or drops a little, people lose money, and then they're a little gun shy, and then it makes that big move, and then it's like you took a loss when you should have been a little more cautious, and then you were cautious when you should have been entering the market. And that's how we can be behind. I mean, that's traders can feel behind in the game all the time. We got to break that cycle, figure out how we're going to get in front of it. And that's what we're trying to do now. So yeah, look, you know, I'm looking for, like I said, my posture is that I'm looking for this until something different. If it breaks support, I'm not going to be looking for this, right? If something out of the ordinary comes up and as a disruptor, well, then I'm going to adapt to that adjuster. But until then, and what we're seeing right? Are people a little impatient with this? It's kind of drifting a little bit. Yeah, they are. But guess what? That's what happens. That's what we see in this period of time, a little bit of listlessness. We're not going to get lulled into complacency. Period. That's a dictate. All right. All right. Let me get this stuff out of the way. Market opened. We saw where it was. Well within the range. This thing could still pull back tomorrow and sit right on top of our channel. Right? Right on top of our channel. Nothing has changed. This is still, if you're in trades, you're like, that's frustrating. Yeah, I took a stab at something, it moved a little. Now it's just kind of, yeah, that is frustrating. We try it. If it doesn't work, we hopefully pick up some pieces, make a little bit. If it doesn't work, hopefully we take small losses. And we're just kind of staying engaged until we see the hand that we're really looking to hit hard, right? And play hard, waiting for the pitch. So is the posture score going to change? No, absolutely not. Not going to change. Michael says fast is just yo-yoing, right? It moved and then it's just like, nothing. And you're like, you got to decide, do I just take what I have? Do I leave a little on just in case it gives one of those last minute surges, which a lot of the times our trades have been doing, if you notice? It's like you take a profit at a good place and then all of a sudden, bam, it gives two more and you're like, ooh, okay. So do you hold on to a little more just in case that happens? Maybe. Maybe. But long term, we actually scored it a little bit higher. We scored it as if it was trying to break out of this. Now we're on a little bit of a pause. We'll see. It wasn't an aggressive move. I believe I went from a 1 point, what did I do? 1.25 to 1.5. I mean, I would say some people might argue for a 1.5 on this trend on the long term, but you can see we've had stronger. That's why I wasn't. I'm comfortable with 1.5. Everything looks great in the long term. I don't look at this and think, man, the long-term buyers seem to be running out of steam. No, everything looks fine. Everything looks fine. Fine for what? Well, we may remember that this is May right here where I am. Selling May go away. I think we could easily see this thing get on up, but then at this point, do we have a consolidation May and June? Um, possibly so. Okay. But posture wise, no change on the weekly, no change on the daily. Okay, volume. Our volume dropped last week. And you'll notice that nothing has changed since then. These three here, this is a great representation of why we're up still, is that we had a selling day with volume that was quickly overcome by 2 above average volume buying days. That was a pivotal minute in the market for me. Well, not minute, but 3 days. However, and we're going to still have this. So my score is not going to change unless today or tomorrow produces an above average volume day, and then it might change. It won't change. Next week, we lose these three, right? Next week, these three, not next week, they disappeared during the course of next week. So this Sunday, they'll still be there. Actually, this one might not. I think this one might drop off. As I think about it, yeah, 1, 2, 3. This one's going to drop off. These two will still be there. So we'll have 2 to 1, but these are going to be old. I'm not going to change my score for that, knowing that these are going to drop off, and all that's left is 1 above average volume day. If there's 1 above average volume day, does that mean, and no buyers, does that mean I'm going to drop it to negative? No. That's neutral to me. If I have 1 which is sitting out here where it's getting stale and nothing else, then all of a sudden the volume score is 0. The volume score is 0, but the trend score is strong. Remember what I said, when we have a strong trend, the volume will definitely end up at 0 eventually because it doesn't need it. We don't need buyers to keep smashing in. The buyers are already there. They're in control. Okay. The major market analysis right now is really a focus on small caps, because small caps are giving us the best representation of how the market is reacting to the Fed. And so the small caps being sensitive, extremely sensitive to interest rate environments, yeah, look, it's holding up, right? It's holding up. Thursday's news might add a high volume day press. Absolutely, right? Absolutely. That's like what we said. It could be the catalyst. It could be the disruptor, right? So we'll see. But I agree with you, 100%, that that's not a might. I would say a likely. That's the sentence I would say. Thursday's news will likely add a high volume day as we think about it. That's a great call up. That'll be interesting. That'll be interesting for sure. So IWM though looks good. It's holding up. Is it going to be enough to raise the score to a 1? I think probably not quite yet still, right? I think it's holding on, but it hasn't like accelerated where we're like, okay, yep, there it is. There it is, where it's a leader now, right? Okay. Sector rotation. I haven't seen anything in sectors at all. I mean, certainly there's been, some concern here or there, but as communication services and as communication services and technology sometimes pause, all of a sudden industrials and financials, boom, and we still have healthcare, we still have consumer discretionary. So it's very strong. We don't have anything that looks concerning. There's no surge in utilities or anything at all. So that's still a 1. Let's take a quick peek at the VIX. The VIX is just a little jittery, but you'll notice even during the course of these last 3 days, boom, 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 even lower still, we're back at 13. Now, what do I have going on here? Is this a hedge signal, you might be asking? Anyone want to take a stab at it? If I'm going to say yes or no to that being a hedge signal, it's kind of a trick question. Is it an automatic hedge signal? The automatic hedge is a higher low, and that's not a higher low. That's a lower low. So that's nullified, right? That, in fact, that's nullified, and that's good because this. So Prest still has some hedge on, okay? And possibly, now here's the deal. If you're carrying bullish trades and you see this, where we've come down, you can see what's happening here. It looks like it's starting to cross. Yeah. Yesterday's high is right there. If we were to close, like if this afternoon we actually looked like this, I would say that's an optional or an elective hedge signal. Why? Because the VIX is still under 14. So those are cheap puts. And it's, yeah, at this point, if you're thinking, so if you're still carrying one, or if you're thinking about adding, yeah, that's a valid elective hedge right there. Absolutely. 100%. Because if this thing, and you can see there's still just kind of this, yeah, that's concerning. We also have this going on though. So it's like, okay, if you hedge and it comes up and it gets to underside of 15 and rolls over, I would feel pretty good about that to shut the hedges down and really implement a more aggressive series of bullish trades right there, right? And that's where I'm thinking we're coming all the way back down to the 12s And where does this occur? Oh, right around the end of the first week of March, huh? Well, that's interesting. That's interesting time. Okay. Okay. Let's go see where we are now. Apparently, I did not get the link saved. I use, just so you guys know, I use MailChimp. MailChimp is the service. It's like a, like a templated service. And sometimes there's systems to like change the links of watch today's video. It just like it randomly doesn't save. It's very strange. I'll just have to pay more attention. So my apologies if there's a missed link. I'm trying to make sure I get those in there. Anyways. Okay. Um yeah, SPY. Let's get to the watch list. Let's get to the watch list. I showed two possibilities and showed the downward slope. That's my preference. The upward slope of it escalating, that's actually, let me go back to that for clarification. So yeah, if I were to, can I like yeah, there we go. Okay. This right here, what I was saying on this one was if it stops at 15, any hedge that you put on now, like today, what we're trading for today, let me see if I can just kind of wipe through some of this. What we're trading for today is if you're hedging, you're saying, I'm worried that this thing might end up back up at 18, right? So if that is any level of concern, so if you're carrying bullish trades that you might continue to carry in that direction, yeah. If you want to just, have some puts on that, if the market goes into a little bit of a drop, as you close your bullish trades, you might be able to squeeze something out of those. I've had times where the hedge was big enough that I walked away from that market consolidation profitably, which is hard to do sometimes. A lot of times, actually. So I'm not choosing one or the other. What I'm saying is, if it does finish, there's a lot of ifs. If it finishes back at the high of today's candle, at the low of today's candle, I'd be like, still like, maybe not yet. Bob, I agree with you there. Maybe not yet. But if it right, then there's that first one. Then you're saying if the market from there does pull back, that VIX is going to rise up. If it just smashes through 15, you're not going to do anything but shut any bullish trade down you have, because they're going to be getting beat up and your hedge is going to work. If it gets to 15 and stalls out and rolls over, well, then we're saying, hey, wait a second. I've already had one lower high right here to come out of this VIX spike. Well, this second lower high is what that would become. So that's what I'm saying is, I mean, that would be very nice to see that, but that's days off and a few ifs have to come along the way. We're just kind of thinking about a few different potentially viable alternatives that the market might move through. Okay, let's get up here. Apple. So Apple gave kind of a false start signal, and then it came back down, and then it's holding, and it's still a maybe. I'm not trading it, but I'm rooting for it. AIG looks great. If you were able to catch this one early, I mean, you really could have caught it later. Hopefully, if you did this trade, I hope you caught it early on this entry day here. And it's now looking pretty strong. AMD. So AMD was one that we said, you know what? I feel like it went right through any opportunity to trade this thing. You can't wait for it to gap up there, right? We can't enter up here and put a stop down here and think that's our risk. Now I need it to go up here even to get 2-1. We're like, no, there's nothing there for us. And you can see that from the time it made that move and it sort of topped out, it's now pulling back. So what do I have? I have a little bit of a cup and handle pattern. Yeah. If this makes a higher low, we're well above the 50. So let's just kind of put a line here. If this comes down and then bounces off of this and this thing's turning, yeah, I think we should consider that. That looks viable to me coming out of that consolidation, right? Amazon, same kind of a thing. Amazon, a lot of these gapped through and then they just haven't done much after, but they still look viable. You know, anything above this, it's above the 50, it's a higher low, higher high. That's bullish, right? There's plenty of opportunity developing here still. We just have to be patient. AXP. Anybody take that one? That's the one we said you definitely could take right here. And has made this move. It's just kind of stalling though. You know, was on Monday it was a little concerning on the open, and then it moved, and then it's here, and it's just kind of sitting. Okay, as long as it's not going down, we'll give it to at least the end of the week. It's hard to carry something that's now gone. If you have something that's gone sideways for 4 days, it's Friday. Yeah, you're probably going to be like, you know what? I'm probably done here. And then from there, I'll wait and see what the next trade is. Over and over and over again, we do this. If you're in any of these, let me know. Boeing, there's still nothing here. There's still nothing here. A lot of people are like, oh, it's holding support. They'll try to buy it. Trust me, until it can break above one of these old highs, get above that 50, this thing is not. BLDR overextended. BX, I would see BX is viable. It's holding. You can see your stochastic is trying to turn. Maybe if it gets back above 126.75, there may be something there. I mean, we don't want to just buy into it just hoping, but that looks reasonable. City. Okay. So this is it. I told you I was gonna hold on, right? I said it sometimes it kind of veers under the line and then it pops. It veers under the line and then it pops right at the end. And it veered under the line. And this is it, right? This is it. It's today followed by whatever the next 2 days are. That's the pop. If it comes, I'm going to be like, yeah. And if it doesn't, I'll be like, well, I tried. Did I already take some here? Yeah, a little. I mean, you know, that quarter to a third zone, right? Like less than half. So there's a good gain booked already, but okay, let's see what happens. Am I blindly hoping it goes up? No. I even allowed these transition candles to come where I would normally have tightened my stop only because of this pattern that I've seen. So right now, I just basically have a stop right under. What I do sitting now, I really don't think it looks like an entry now, to be honest. I'm skeptical. I'm skeptical that I'm going to get that pop. I'm not confident, but I had a plan. I said I'm going to do it. I'm going to stick to my plan, right? But I wish I were more confident, to be perfectly fair. Okay. But hey, it worked. It was a good trade. We all talked about that one. Anyone else? I know a few of you traded at least some of that. Okay. So those Heiken Ashi always look so much cleaner, don't they? It's tempting to only watch them sometimes. Don't do that. Caterpillar looks great. Still moving. I think that should ride till Friday, at least as of now. Bob says he's up in that. Very nice. Capital One looks like this could be a viable go right here. And it might even give you the ability to, now you might not, you could aggressively, if you were to take this trade, put your stop underneath this candle here, or you could put it here for today and then tighten it for the next day. So you could be a little, all that's going to do, let me tell you what that's going to do. If I chose one stop versus the other, it's only going to make my position size change. If I have the tighter stop, I'm going to have a little bigger position, which means Um, the loss will be the same, even though the position is bigger, the stop is tighter. So the loss would be the same theoretically, but you would get there sooner. So if you're thinking, hey, if it goes, I'm wrong, then yeah, get a bigger position because if you're right, you'll make more money. If you're like, I'm just going to be a little more conservative with that, you put the stop off the current, that candle I'm on now, the second candle back, put it underneath that low. Then when the market ends today, you move the stop up to today's low for tomorrow. And that's the procedure you continue forward with. That's a great way to just, ease it a little bit. Okay. COP, nothing. I'm glad to see oil a little bit. I mean, it's iffy. Costco, still trying to go. It's like the Energizer Bunny. CrowdStrike. Okay, so this is what I was hoping for, right? I said, I believe the buyers have done enough that if the sellers come in and don't get back below like this gap right here, we're back on 50, maybe around 305 for a support level. The problem is we've got earnings just like camping. Volatility is through the roof on this right now. So if you're an options person, it's got to be a spread. You can't buy those options. They're just way, 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 way too inflated. And we're expecting that vol to drop out. I think at this point, there's a chance we're going to just have to wait until after earnings, let this vol bleed off, let this thing settle back into what it's going to be next. CSX, tried, and then it just sort of lost right there yesterday. And if you were using Heiken Ashies, that was it, right? You would have moved your stop and it would have popped you out yesterday. And that was it. Now what? Now it's setting up again. Just like that. You follow your rules. Now remember that this did not happen. If you're like, what happened? Right? That did not happen. That's a bad data feed. So it never really got above like this area here, but that's a great higher high. Now it's pulling back. Yeah. This is definitely something that looks like a viable trade out in this area right here. So we're watching that one. CSX is strong. Industrials are strong. Love it. Delta actually, I would take it now. If it pulls back and holds above the 50, I think that there's enough momentum here that I would be willing to give it a shot. Home builders, no, not yet, right? You can see the difference. Home builders have just sort of meandered along. Yeah, this can't seem to find their direction. Here's the Dow. We're down, but if you just put this chart in front of me and say, what do you think? I'd be like, I think I'm bullish and I'm looking for a trade. That's my answer. People are, why? Because that's a bull market. And when I have a bull market, I'm going to buy the dip. Would have worked great so far. So let's just keep kind of expecting that until it proves otherwise. Ford, okay, right? Ford trade. It was an interesting because we were looking at it early in the day, and you can see why sometimes early in the day we don't love because it actually pulled back, but it held. If anyone's in this one, it looks like we're starting to move now. We're really getting that confirmation, and it held on the 50. Now this is we'll see what happens next on this. Took it and it died. When you say died, did you stop out or just it went into negative territory? Because it shouldn't, based on where it was, I wouldn't expect. I mean, yes, I would expect that it went negative for sure. Bob said lost and stopped out. Okay, stopped out. So what was the I could see maybe a stop out. I could see that. If you were expecting this hold here, um It's still holding support above the 50. That's what's tough, right? That's what's tough. That's what makes any morning signal difficult, which is why I'm always reluctant in the mornings to say, let's be careful. Okay. Fastenal. There you go. That's another one. That I think you said, Michael, are you in this one? This is another of the industrials that it's made its move up, and then for now 2 days straight, we're sideways. We saw above average volume yesterday, but it was a doji, so that was a tug of war. And now, or 2 days ago, yeah, it's definitely starting to slow down. This is what it looks like on the Heiken Ashi. The Heiken Ashi is just going to show us candles getting smaller. Big, 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 smaller. So what happens is we move the stop up. You could also, in a situation like this, if you're really looking to protect your profit from when it starts to pull back, because the expectation is that it will. And you don't know if it's going to be a pullback like this one that takes a week or this one that's kind of big. That was a big pullback, but it sat on the 50 and then made a beautiful move. I mean, this thing's been making great moves. So what could I do at this point? I could take it down to the 4 hour because look how the 4 hours playing out. It's already accelerating. We already have 1, 2, 3 smaller candles, and this one has a shadow. So if you were using this mechanism, you might put your stop right underneath 2 candles back, not this candle, but this candle. And based on this candle, you wouldn't move it on the next one. You would just leave it right underneath this low here, 72.82. So maybe you're at 72.65 or something, you know, something 72.70 right underneath here. If it turns red, you're out. That's going to be the most aggressive way to keep as much as you can of the profit that you've earned. But you know, if same thing as always, if it catches you and then turns around and goes the other way, of course, you're out. Okay. Oof, I'm a little behind today. I got to speed up. GBTC, look at that Bitcoin breakout. We said we were kind of looking at it back here, and then bam, 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 gone. GE still looks kind of bullish. I think there's some GE crypto conspiracy theories afoot. I don't really. Gold, Google got beat up. The market didn't like the way that they rolled out their AI. I don't know. There was something on. I didn't look deep into the news, if anyone knows, but it's a little iffy here. It's Google got into a struggle all of a sudden. Remember, we said we were iffy when it got all the way back and didn't want to trade into this. And then when it got this lower high, that lower high was concerning. Now we're at a lower low. So Google is not doing great. Meta's still strong though, Bob, right? Home Depot strong. I would trade the next one. I'm a believer now, Home Depot. You've convinced me. IBM, lackluster. Intel, lackluster, and getting ready to get kicked off the watch list, in fact. IWM, it's holding up. It's still trying to hold up. JP Morgan, strong, but waiting for pullback. Actually, some people might, I don't know. I'm still thinking resistance. Meta, still trying to move. Microsoft, I think setting up. If it holds support at 400, I would trade it. Anything at or above 400. If it holds support at or above 400, I will trade it. Netflix, waiting. NVIDIA. Okay. NVIDIA giving us a setup. Look at that vol has come down quite a bit after earnings. Makes the options more reasonable. We're pulling back. Copilot is really good. Okay, I love it. And don't forget that they have Copilot and they own basically 50% of ChatGPT. Microsoft owns half of OpenAI. So, you know, they basically have both. I'm a huge ChatGPT fan. Car looks strong, pulling back. That's the industrials are really leading some things to right. Look at what we have. Fastenal, BLDR, we have Car, we have all like there's a lot of strong industrials out there, right? CSX, loving it. Industrials has moved into a real favorable position. Qs actually look fine when you look at that. That looks like a setup. I'm not concerned about that. Raw stores, that was one that we found and looks pretty good. See you, Bob. Take care. Looking strong, continuing to go. April put on QQQ. Be careful not to let it bounce from here. Right? It's an uptrender. It's pulling back. When this pullback is done, whatever this gives you, be careful when it bounces because, like right back here, it looked like it was going to drop and then boom, 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 boom. And all of a sudden you're like, oh my God, what just happened? That's the same kind of a thing. SMCI continuing to meander around, but maybe setting up. Here's SPY today. We're flat. TPR. Looking for another bite at the apple there, Michael, right? It's flagging. A lot of momentum. I think looking for another bite at the apple. Whoops. UNP. UNP looks like it's starting to set up here. It pulled back. It's starting to stabilize. Let's be patient, but I think it's close. Another in the industrials. The VIX is not concerning today, right? It's concerning that it's stabilizing, but it's not rallying the other way. I don't know. We'll see what happens. Waste management just won't give us a consolidation, but we're waiting. Walmart waiting for a consolidation. Biotechs overextended. Materials overextended. Communication services looks like it could be setting up. It's holding up even though Google's getting hit. Meta's doing fine. Netflix setting up. There's probably some others in there, maybe a Roku or something along those lines. XLE, I'm going to pull it up. Energy's kind of sideways. It's not really, we'd like to see it not rally. Let's see how Roku looks. Roku, oh gosh, Roku looks terrible. Oh, they got killed on earnings. I wonder who's doing well. And you know what? Let's take a quick peek. I know I'm behind, but it's worth it for us to go look at communication services and who is telecom. So maybe it's the telecom more than anything. Disney. Yeah, maybe it's Disney. Meta's doing fine. Maybe it's Comcast or something along those lines. Let's take a look. AT&T, CM, CSA. Yeah, I'm not seeing it. All right, we'll stick with those. Financials look great. Industrials look great. Technology looks fine. Staples steady. Utilities, nothing yet, but we're watching. If it starts to move up, we'll be like, is that defensive or is that just everybody's capitalizing? Healthcare looks great and it's setting up. I'd be looking to try to trade the ETF on this one. And discretionaries. Okay, there it is. Yeah, okay. We're kind of in a little bit of a listless day. We'll see what happens here. We do still have plenty of things that are setting up, keeping an eye on those, really focusing on industrials and financials right now. Those are the two sectors that I'm keying in on the most, but I'm definitely watching the others to see if there's signals that pop. If you're carrying a bunch of trades, definitely watch that head signal. If this day turns around and the VIX ends up popping back above 14, that 14 level is about where I would think about that type of a position. Tomorrow night, we are having our last session. Oh, Press, I'm glad you're here. I was thinking about using your 100 trade spreadsheet that you sent me, if you still give me permission to just use that as a sample to walk through what are the considerations to process that and move on to the next 100 trades, right? What patterns would we be looking for? Things like that. So are you good with that? I mean, you could, if you don't, first 100 is good, second 100 not so much. Well, let's use the first 100. And then maybe sometime we could talk about the second 100 and process that. But if you're good with it, I'm gonna do it. You don't have to show up, but you can watch the video later on. Or if you want to come, I'd probably ask you a few questions, just to kind of, put some perspective in with it. But yeah, it's really more to just kind of say, when you do get that first 100 trades, what do you do with it now? I know the temptation is, I want to keep going, but I don't. I want to process that, and then I want to start the next one. And it's 100 trade iterations. Every 100 trades, you're getting better. That's the thought process there, right? Every 100 trades, you trade 100, you're looking at the patterns, you're looking at what you're trying to do better, you're focusing on a couple of core things where you see patterns that you might be able to improve, and then you look to improve them, and it's just an ongoing cycle. And look, don't be discouraged. We all have times where from one group of 100 to the next, and you're like, oh, that's frustrating. Great, learn from it. There's information in there. Okay, lastly, and then we'll wrap it up, because I know I'm a little over time. We're back to section 1. So speaking of iterations, every 100 trades we improve, and every 2 months we improve. What are we improving every 2 months? Our trading plan, because there's 8 sections, and we do 1 section a week, and we spend 1 hour per week on our trading plan. That's what we all committed to. So get that iteration in. You should. Some people already have one great new pass at their trading plan. I know it can be tedious sometimes, but it's worth it to just commit to that. Get that grit to be like, let me spend some time on my trading plan, really make some connections of what I'm seeing, what I'm doing, and establishing it into my rules, my routines, my cadences, etc. All right, so I will see everybody tomorrow night, 8:30 p.m. Eastern, for the final Trading Foundations class, where we are going to talk about processing a completed grouping of 100 trades. Then next week, as we kick into March, options. Very excited for the options. This time we get 2 months instead of just 1. So we're going to spend a little more time, get a little deeper. I hope you're excited for that. I know I am. All right, everybody. Thanks for coming out. It's good to see you. Have a wonderful rest of your day. As always, happy trading.